Thank you everyone for coming to today's live trading session. Today is January 24th, 2024. We're almost done or finished with the first month of this new year. And it's been an interesting month. Of course, you can still tell that the market isn't moving the way it normally moves, but that's expected, especially during the first month. You can actually say during the first 3 weeks, things aren't really back to normal. But for the most part, we are expecting things to get back to normal maybe sometime soon. But who knows? We could be in a new normal. But of course, what we're going to do, we're going to look at certain pairs, look at certain opportunities, see if we can find some higher probability momentum plays at the start of today's webinar. And then from there, we'll talk about what's going on fundamentally, economically, and then from there, we may do some more top-down analysis. But I hope your trading year has been going well thus far. I hope you figured out some of the things or some of the areas you need to improve on for this new year. And one thing I want to point out is that it's okay if you make a mistake. I know even we make mistakes from time to time. Some of them are foolish mistakes, but each time we have to try to get better and better with our execution, better and better at sticking to our plan. And that's really one of my main goals for this year is to just be better than how I was last year. But anyways, with that said, let's look at the chart. So the first pair we're going to look at right now is US dollar, Swiss franc. We're currently looking at the daily time frame. And you can say somewhat I'm doing some top-down analysis with this pair, but for the most part, what we see here is that we had this nice strong impulse to the upside. We can see that price came to an area of structure and supply with this hesitation candle. This is a candle where we expect sellers to come in. So we did see that, and let me just draw that in. I'm just going to make this real quick. So right around here, you could say we had this area of supply that price is now responding to. But you can see that on a daily, we're in a bullish environment. The 20 simple moving average is sloping upwards and price is above it. But if you drop down to a smaller time frame, you can see things a little bit different, because I believe this is right now we're in the middle of a correction or pullback lower, possibly to this area, just to push up and retest these highs again or expand further out. That's what I believe we're in the middle of right now. So of course, I'm expecting more downside, more movement to the downside, but how we get that will depend on price action on the lower time frames, because we could actually see price pull back and then come back down. But anyways, let's drop down to the 4-hour chart. All right, so on the 4-hour chart, we can apparently see that momentum was slowing down. We had this nice rally to the upside, and then price started slowing down. You can see from here that we had a nice push to the upside, and then later on price kept making higher highs, but the momentum was weakening. And whenever you see something like that, then you know that we're in the middle of a rotation in price. So we saw the move was parabolic initially, and then now it was still moving up, but moving up gradually, moving up slowly. You can see the momentum shifted. So what we can conclude is that we're in the middle of a reversal in price. And as a matter of fact, let me do this. Let me do this. So we're going to draw this area right here. This represents our ascending trend line resistance. And then what we're going to do is clone this line, and we're going to drag it down here at the lows, maybe right here. So yeah, this is what we have right here. So what we see right here is sort of like a rising channel, ascending channel after a strong impulse or expansion higher. And whenever you see that, then you know that momentum slowing down. But we also see a break of structure right here. So we see a break of structure on a 4-hour chart. So then this lets us know that we're in the middle of a potential reversal in price. This is the neckline right here. And, of course, this candle hasn't closed yet, but what we can assume is that it may close like this. Right now, we're about 50 minutes away from the close of this candle. So what we can expect is a rotation. But prior to every rotation, there is always a correction or pullback. But, we'll talk about that a little bit later. In the meanwhile, what we could do is drop down to a lower time frame and see what the lower time frame is showing us. And if you go to the 1-hour chart, you can see right here that we have this nice strong push or expansion to the downside. And right now you can see that, hey, if this candle closes like this, then we definitely have this zone of hesitation, this drop base rally type move. Drop base drop move right here, where we typically know that sellers come in at. So then what we can do is identify this. Now we still have to wait for this candle to close. We don't know if this is going to be a legitimate supply area until we get a candle close, but of course we might as well draw this in. So then what we're looking for right now is a potential pullback into this zone and a possible sell-off. So of course that's what we'll be looking for. And if you drop down to the 15-minute, you can see things a little bit better. This may be a 15-minute correction where we see price correct into this zone and then sell off. But bear in mind that we can also see something like this. Let me tell you the other alternative. We can see something like this where price pushes up. We get a break above these lows right here. And then price could come back down and then retest this area and then push up again. We could see something like that because price may want to go through a deeper correction, a deeper pullback. So, whenever we see those warning signs, like especially if we see price correct and it corrects to the upside and it sort of tests the highs, then you want to be sort of cautious on whether or not you should sell. In all honesty, you want to maybe sit on your hands and wait for price to maybe show its hand before you decide to do anything. But in the meanwhile, what we're doing is looking for a sell opportunity. Right now, we have no reason to look for buys because every time frame, even moving, high to the 4-hour chart or up to the 4-hour chart is bearish. So we have the 15-minute bearish, 1 hour bearish. We can see right here 20 SMA sloping down, and obviously the 4-hour is bearish. So then every time frame is bearish. So we don't want to look for buys now. We're in the mode of primarily looking for sales. So right here is an option where, hey, on a 15-minute chart, we can look for a potential sell opportunity. So if all goes well, let me modify this level because actually the real supply according to here is right around here. So what we can do here, we can simply wait for price to correct into this zone, and then we'll look for an opportunity to sell and then maybe retest the lows or, expand a little bit further. It all depends on what we see on a higher time frame, to the left. Because I think, let me see. Let me go to see the 4-hour. Yeah, okay. Yeah, so then right around here, we are in this zone or approaching this zone of demand right here. Let me just draw this in. So we have this zone of demand on the 4-hour that price is heading towards. So we may see some type of bounce from this zone. And or a bounce happening soon that can give us a deeper correction. And if price does test this zone, let's say price does continue going down in the tested zone, then we'll primarily look for a 1-hour pullback instead of a 15-minute pullback. So yeah, but yeah, we'll see. So in the meanwhile, we're on a 15-minute chart, and this is what we'll be looking for. We'll be looking for this type of move where we get a correction up into that zone. A correction up into that zone and a pullback in price. Let me delete this. So then let me just draw this in. So we'll have a pullback into this zone. And for some reason, the 4-hour zone is not even showing. But yeah, let me look to see if it shows on here. Let me make this visible. And yeah, right here. Okay, so going back again to the 15-minute chart, we're looking for a pullback into this zone, which we know is supply. We know sellers are in this area. And then from there, we'll look for a potential sell on bearish confirmation and maybe trade to this zone of demand right here. Because as soon as price gets here, then we're going to expect a deeper correction in price. We'll see a deeper pullback, likely a 4-hour correction. Because that pattern that we saw earlier, that rising channel and that neckline break took place on the 4-hour. So we'll see a 4-hour correction, and what I'll do is show you where that would go as well. But anyways, this is our first setup right here. So right there, we're looking for sales or shorts. As soon as price comes to this zone, we're looking to short or sell. We're going to stay on that side of the market. We're not going to deviate. We know momentum is on our side. Just trade on the side of momentum, because that will give you an edge in the market. I know oftentimes people love to trade or pick tops and bottoms, but you don't want to get into that habit of picking a top and bottom. You want to trade on the side of momentum. Remember, the trend is your friend. If you know where the pullbacks are going to go to, then you look for shorts in that area. So then, yeah, that's pretty much it. Are there any questions before we move further on? And also, there's a number of things you can do as well, as far as measure the average daily range for today, because price fell kind of hard for most US dollar based and US dollar denominated pairs. Price fell pretty strong, and that's mainly due to US dollar weakness. The US dollar was quite weak. So you're not going to put the short to it? No, I'm not. I'm not going to put that. But yeah, you guys get the idea as far as what to look for. A retracement into this zone, and then a sell-off. But yeah, I guess I could do it. Let me do something right quick. Let me go to the 1 hour, see how things look on the 1 hour. Okay. All right. Yeah. Okay. So then, yeah, I just want to see certain things on the 1 hour to give me more confidence in this position. But yeah, so yeah, this is supply. So yeah, if I'm going to actually look for a short, then what I'll do is, of course, look for a sell right around this zone, right around here. And of course, you can keep your stop above this zone right here to protect it. And then you can shoot for extended targets of 1 to 4, but not a 1 to 4, but a 1.4R or something like that. Just know that somewhere in this zone, we're going to see demand. And, we have to be aware of that. But of course, manage your position. Just manage your position while it's making its way down into that zone, because you never know. You never know. And I want to keep an eye on this as well, because once price reaches, or if it reaches this zone or area, there's a likelihood we'll see a deeper correction. So just bear that in mind before you execute a sell. See if it tests this zone right here, which it looks like it may want to before we see the pullback. So yeah, we may have to adjust this, but that's what trading is all about. Trading is all about having a plan, but being willing to adjust your plan based on how the market is moving at that time. So yeah, but this is the US dollar Swiss franc. Are there any questions before we move to the next setup? Because of course, this is a time for you guys to ask us any questions you want us to answer. We're here for you guys. So yeah, just let us know if you have any questions or anything that you want us to touch on, and we would definitely do that for you. All right. So yeah, I'm not sure what we're going to do now. I guess what I could do is, yeah, I might as well do this now. Show you guys something like even to the right. We have the Dixie right here to the right, and this is on the 1 hour chart, and you can see that it's quite similar to what we saw on the US dollar Swiss franc, because they're strongly correlated. The US dollar index and the US dollar Swiss franc are strongly correlated. And let me remove this right here. Strongly correlated. And you can see the price action is quite similar. If you go to the 15-minute chart of the US dollar index, you can see that we're in the middle of this same move. And, they pretty much tell you where supply is, in this area right here. But you can look at the US dollar index as a way to help you with your trading idea. And I see a few things that have me somewhat hesitant on entering a short if we do get a pullback. But I may hold my peace for now. Let me go to the equally weighted index to see what is happening on the equally weighted. Okay, yeah. Because on the equally weighted index, it seems like we're already, well, let me go to the 4 hour. I don't want to make any assumptions. Yeah, it seems like we're past that. Or are we past it? Let me see. Yeah, we're in sort of like this demand area with this nice wick right here, but seemed like price passed it. So then that could be a sign that we could be due for a stronger reversal. We'll see. As a matter of fact, let me get rid of this. We don't need this channel anymore. Yeah. So yeah, we could see price start bouncing up now. Yeah, that could be, that's something that we definitely have to pay attention to. So we may abort this idea. We may see a deeper correction, but I'll let you guys know what we'll do. But for the meanwhile, yeah, we're expecting this sell right now. Momentum is to the downside. We're looking for a short, but just bear in mind we could see a deeper retracement. So keep an eye on the nature of this pullback, how price pulls back into the zone, because that will make a huge difference on whether we sell or not. If we see a strong impulse, a strong expansion candle up into the zone, then you know that this is an area of imbalance, and buyers are within this zone right here. So then we'll sit out on this trade. We won't look to short, but just look to see how price moves into the zone, and that can help you to determine whether it's a zone worth setting a trade around or placing a trade at. So yeah, anyways, Mark, did you have anything you wanted to share before we move forward? Yeah, I guess I can kind of chime in and briefly say something real quick. I'm just going to talk about this sell-off in the US dollar Swiss franc, and how like the environment, the conditions, what the market is sort of focusing on, or what they've been focusing on for really most of this year, is what's really contributing to a lot of the price movement that we're seeing on today. Now, for the dollar, you guys all know that the dollar moves at the mercy of treasury yields. It's pretty much at the mercy of the bond market. And this morning, we are seeing treasury yields dip and slide to the downside. Like, I don't know, if I can just, pull it up real quickly, or just kind of pull up the side window up here so that we can see it, for ourselves. But you see, this is the US dollar equally weighted index. And if we was to go to, let's say, the standard benchmark US 10-year yield, let's do that right now. You can see that the US dollar has been weakening. This is the 4 hour right here. We go to a daily chart, you can see how it's been selling off compared to yesterday when we saw it try to push and rally to the upside. But this is what's contributing to that, dollar weakness. And we see US dollar Swiss franc selling off for today. But a lot of it is primarily due to risk appetite. We had some good earnings data, or some solid, a solid performance from Netflix on yesterday. And even this morning, even with the earnings docket, like I think we had AT&T, and I think, I can't remember, but we had a few others that missed on the earnings, but they really beat on the revenue side. So then that's what's contributing to some of the risk appetite on today. And then we also had some news from China, or for the People's Bank of China, that they're going to add some stimulus. So then this is why we see futures markets rally to the upside, and we're seeing this dollar weakness for the session. But I'm going to reserve a lot of that analysis for later when we talk about the fundamental part. But I just wanted to talk about how really markets for this week, even stock markets, commodity markets, they've really been moving and tied to the bond market and what central banks plan to do with interest rates, because how the bond market move is sort of an indicator of what the market is expecting central banks to do with their monetary policy. And for today, in a few minutes, later on, we have a Bank of Canada monetary policy meeting, which I'll probably talk about a little bit later. But I just wanted to jump in and mention that. Yeah. All right. So, we'll see how this goes. I know right now the US dollar Swiss franc is in this zone of 4-hour demand. So we may see a deeper 1-hour retracement. And if we see that 1-hour retracement, then we can, for starters, we can definitely plan for it. And we definitely see this as area of supply, which this area still may hold. Even if we get a deeper pullback, we'll get a deeper pullback into this very same zone. So we may not have to change anything. So just keep your eye on this right now. But yeah, that's pretty much it. We're looking for shorts on the US dollar Swiss franc. All right, so then let me go to one more that's similar, but on the opposite end. That's Kiwi USD, NZD USD, and we're currently looking at the 1 hour right now, and it looks like price wants to keep pushing up. That could be a sign that the pullback is over, and we could see another expansion to the upside. This could be maybe a 15-minute correction, something like that. But anyways, yeah, we see on a 1-hour chart that we're definitely bullish on this particular pair. Let's go to the 4-hour, because if we see multiple time frames bullish, then we can make that assumption. So then right here, we also see the same thing. Of course, price is hitting structure right now, but I do believe we're going to probably get a break to the upside, which is what we want to see. But this is all due to price pushing down into an area of demand. You go to the daily chart, you'll be able to see it a little bit clearly. We have this area with this nice wick right here, but we also have this zone of demand right here. But I think this is due to this wick area right here. Let me remove this zone right here where we're seeing the buyers come in at due to this particular zone. But yeah, so of course this is daily demand right here. This is a daily demand zone or area, and this is the reason why we're seeing that rotation in price take place. But over here we could see, it's very similar to what we saw with the US dollar Swiss franc, but on the opposite end. We see this falling channel. I don't want to draw it now, but we also see this consolidation, and price is pushing to the upside. So then all we have to do right now is, well, for starters, I'll probably wait to see how price breaks this level, or breaks this particular level or zone, you could say. It's sort of like a neckline, but we already had a neckline break right here with this double bottom at the bottom of this expansion. But then this could be like another neckline that you can pay attention to. But for the most part, we're bullish. That's what we are. We're bullish. And on the 1-hour chart, we're pressing to the upside. It seems like this was a minor 15-minute pullback. I thought we would get a deeper correction, but it looks like the market may want to expand and not give us that. But we'll see. Until price breaks these highs, we're still in a pullback phase. Price can come up, test the highs. It can do something like this, test the highs, then come down, and then go deeper into our area of demand, where we definitely see areas of demand. You know, like right here is an area where we could expect buyers to come from. And, you know, even all the way down to this area right here is where we can expect buyers to come down to, you know, right around here. This whole congestion area, really. But yeah, the market can go down if we do see these highs respected. But yeah, we'll see what happens. It seems like this momentum is really picking up. The dollar is really selling off now. So it's interesting what will happen. But in the meanwhile, we're just going to sit in our hands and not do anything yet because in all honesty, I would like to see a better pullback. But yeah, we'll see on this one. It'll be great if we can get a deeper correction, but we may not be able to get that. So we'll see. But I'll keep my eye on this. I'll let you guys know what I'm going to do with this one. I don't want to give you anything yet because we could be seeing a completely different scenario shortly. So I'm just going to sit on my hands. I'll post something in a chart markup if I see any changes. But in the meanwhile, this is looking quite bullish and you know, definitely strong to the upside. So look for buys. If you do want to trade Kiwi USD, primarily look for buys. Don't look for any sells right now. All right. So are there any questions before we move to the next setup? Going once, going twice. Okay, let's do one more. Let's do US dollar Japanese yen. Now this one is kind of tricky right here. This one's kind of tricky. As a matter of fact, yeah, I should have cleaned this chart up. But yeah, let's go to the daily chart and see what's going on. So on the daily, we were expecting this breakdown to the downside. For the past few days, we were expecting something like that to happen. And the reason why is because we had this nice daily expansion to the upside, right into an area of structure. Look left, structure leaves clues, but this area of structure is not only just structure, it's also an area of supply. So right around here, we have this area of structure. Let me just change this color. But at the same time, we also have, you know, some supply, you know, in this area as well. But, you know, what we saw when price made this expansion, we saw for the past few days, price created, you know, indecision candles. We see one right here. This was on Thursday of last week, Friday of last week, this next candle. This was Monday, and then this was you know, Tuesday. But we see the sideways price action, which told us that momentum was slowing down to the upside and that we should expect some type of movement to the downside. So then you could sort of, the market gives you leading indicators of what's going to happen. And the very fact that we saw this sideways price action, this indecision right here on these last few days gave us a clue that, hey, we should see sellers come into the market, and we see strong selling. The dollar sold off quite strongly. So then we definitely want to stay on that side of the market for now, because we're expecting a correction to take place on the daily time frame. So zooming out, what we can do from here, we can go to the 4-hour chart, and we can see that price did break, or well, we're about to see a break to the downside. Of course, you can't make an assumption yet. Let me get rid of all this. Wow, let me get rid of this because I don't want to confuse you guys. But you know, we definitely did see what we were anticipating, this breakdown to the downside. So then now we know where momentum is, and now we know where order flow is. Order flow is primarily to the downside, and we should look for opportunities to short real soon. So right now, we're just looking for the pullback. And the question is, where could price go? Well, we can look on the 4-hour. On the 4-hour, we say, hey, well, the next area of supply is all the way at these highs right here. So you could say, hey, Well, price comes and retests these highs on the 4-hour, then we can look for another possible short opportunity. But we could see something a little bit better on a smaller time frame. So go down to the 1-hour chart. And what do we see on the 1-hour chart? Well, we see this area of indecision right here. You see these sideways candles right here? Boom, 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 boom. This is an area of indecision where there was a pause in the market where buyers tried to come in and push price up, but they were defeated and the sellers came in and we saw a strong, well, a nice bearish candle following that. So what we can assume is that this zone right here is a zone of supply. So then what I'm going to do is, you can draw this in if you want. Just say, hey, let me just draw the whole zone from here all the way up to this high right here. Take the low and the high of that entire range bound sideways price action, and then that would be your zone of supply. So in this case, this is 4-hour or 1-hour supply. There's a 1-hour supply zone, and we're simply looking for shorts if price can come into this particular area. So yeah, that's what we're looking for. So again, we'll be waiting for a pullback, and if price comes into that area, then we'll be looking for a short. So a pullback, 1-hour correction into this zone, and then from there we'll look for a sell on bearish confirmation, and then ride this lower. So yeah, let me just put an arrow right here. So yeah, quite similar to what we saw with the US dollar Swiss franc, but this is the US dollar Japanese yen. Since the US dollar is really selling off, and since dollar is king, we're just going to look for those pairs for today. Now there are other opportunities too. You can go short tool or no? Well, yeah, I guess I could. Yeah, let me see something right quick. Let me go to the 4-hour right quick. Let me see something. Okay. All right. So yeah, I'm just trying to draw out these zones where potential sellers can come in at. That's all we're doing right now. So based on what I'm seeing right now, we may get possibly a deeper correction, more closer up into this zone right here. So then let me modify this and adjust this right quick, because we may get a deeper correction. But yeah, if we see price come up into this area right here where, we could potentially see, sellers come in right around this zone and expand lower, and we can give us a nice reward to risk ratio. As a matter of fact, if you want to play it safe, then you can have a tighter stop. I mean, a larger, wider stop. But again, this is the US dollar Swiss franc. And yeah, you can look for an opportunity to enter at maybe 147.555, maybe a little bit closer to the highs, or, right around that zone. You can look for an opportunity to short if we do get this 1-hour pullback. So, we'll see what happens. But yeah, we're looking for that correction and then thrust, pull back and then thrust lower. All right. So yeah, you can have your setup at 147.555, and then maybe your stop at 147.93. But if you want to play it safe, put your stop behind psychological institutional level of 148 flat. Let me just draw that line in there. Yep. If you want to play it safe, then you can definitely place your stop behind this 148 level, and that would put your stop behind these highs right here where these wicks are. So you may want to do something like that, but yeah, I'll leave it up to you to decide how you want to plan out your trade. Yeah, but yeah, this is the US dollar Japanese yen. So are there any questions before we move on? Let me just check to see if you guys have any questions. If not, then of course, I guess we can move on. Yep, we can move on, and then we can look at other things. I think Marvin, I don't know, Marvin, do you have anything you wanted to share before we move on and you talk about what you want to talk about? Yeah, I can. Yeah, because I know Marvin's going to go through a little bit of fundamentals, and then from there we may take a peek at gold. Because I haven't done analysis on gold in a while. We can actually do it together. I'll do it in front of you guys. Analysis on gold and what I think is going to happen. But yeah, for the most part, we're done with these momentum plays. Now I'm going to pass the mic over to Marvin, and he's going to talk about what's been going on fundamentally, geopolitically, all that good stuff. Yeah, so of course, as you guys know, we're almost through the first month of January, or the first month of 2024, I should say. And, most of you guys know that there's still a lot happening in the world. There's a lot of news going on, even with the whole, earlier this month with the Bitcoin ETF release that was really pretty disappointing. It didn't gain as much traction or appeal, and we saw Bitcoin sell off. But well, yeah. Let me just go there real quick because that's sort of connected with what we're seeing here. So let me go to Bitcoin, and this is let me do the daily chart right quick so we can just see from a bigger picture how for most of the year, since the beginning of January, like we've been seeing, Bitcoin sell off and tumble lower. Of course, it crashed through these lows right here, and it's sort of been tethered around this 40,000 handle. And as you can see, it did dip and close below the 40,000 handle a few days ago, and it's been trading underneath. But now it seems as if it's trying to make its way above this 40,000 handle again, and that's primarily due to some of the U.S. dollar weakness that we talked about, or that I talked about a few minutes ago. How really the markets in general have been really under the guidance of what bond markets are doing. So if treasury yields are falling due to rate cut expectations remaining solid and firm, then that's going to contribute to risk appetite, and that's going to contribute to dollar denominated assets rallying to the upside. And although Bitcoin is not a traditional it's not a traditional legacy asset. It's something new. It still trades at the mercy of the US dollar, because the US dollar is the most liquid currency in the world. It's the world's reserve currency. So pretty much a lot of our transactions, financial transactions around the globe, they facilitate these transactions using the greenback or the US dollar. So then, of course, it's getting this temporary bounce, but this bounce in Bitcoin isn't sufficient enough to convince, Bitcoin holders or even traders of Bitcoin that it's time to go long. This has been pretty discouraging, the way it tumbled, but that's primarily due to the disappointment from the Bitcoin ETF launch. And I think we're still seeing some unwinding and even some deep selling of, I think, one of the Bitcoin ETFs, Grayscale Bitcoin ETF. We're continuing to see that unwind as well and tumble lower. But let me see if I can put it up here. But I'll just keep this here and do this real quick. GBTC. I think that's it right there. Yeah, and we can see that this particular ETF has been tumbling along with Bitcoin right here. But yeah, so pretty much today, there's a lot happening. There's a lot going on. But what I want to do first, I want to actually pull up the economic docket, pull up the calendar real quick so that we can see what news came out for the session. And let me just do this real quick right here. Like, I know I need to change screen. All right. Okay. So dailyfx.com. Let's go to the calendar. I like to look at their economic docket since it's a little bit much bigger. But yeah, today's session has been primarily about business growth, business sentiment with the PMI data, and also the Bank of Canada statement. So then, of course, we see that the Bank of Canada monetary policy decision will be coming up in about an hour from now. So then that's going to definitely impact the Canadian dollar. But whether or not that has any impact, it will really depend on what these policymakers say or what they write in their statement. But we're not expecting them to hike rates or cut rates. We're expecting them to keep rates on hold at 5%. And this is even following months of sluggish data coming out of Canada. Canada has not been doing well. It's been pretty much, having months of slower growth, sluggish data coming out. And some analysts tend to think that that's a sign or a canary in the coal mine that the U.S. economy is going to do fairly bad, because Canada really, a good portion of their GDP, 80% of the products that they create get traded to the United States. So any drop in demand, like consumer demand, or any drop in economic activity in the US would impact Canada and may contribute to some of the sluggishness there. So then if we hear the policymakers in Canada say that they expect I don't know, let's say they expect inflation to continue to drop lower. They expect retails and housing data to sort of deteriorate and crumble. Then this could also signal that the U.S. economy is not out of the clear. And even though the U.S. economy is experiencing this Goldilocks scenario where it seems as if there's, the data, the macro prints aren't coming out too horrible. If anything, it's been showing that the economy has been firm, even in the midst of all the rate hikes that happened even the past year. So then, analysts are going to be paying attention to this announcement, the Bank of Canada announcement, not because it's so important, because Canada is still is a much smaller economy than the U.S., but it could serve as a leading indicator what could potentially happen next week when the Fed announces their monetary policy statement and interest rate decision on next Wednesday. So then, of course, that's going to come up in an hour. But let me just review this. For today, it's been pretty much about business sentiment, business growth. And as you can see, we had the Flash PMI data come out from around the world, from France and different places, from Germany, from the Eurozone area. And of course, we could see that it's still in contraction territory, but we did see a pickup in manufacturing PMI data, which was surprising. Like even for here, we see that the forecast was for 43.7, and we see that German manufacturing picked up, even though it's in contraction territory, but the contraction slowed down. Like the pace of contraction ended up slowing down because, we saw this jump, from 43.3 to 45.4. So then someone could say this is sort of mixed data across the board. We're seeing the same thing here with the Euro-wide manufacturing PMI coming in pretty firm, or, coming in better than the previous number of 44.4. So this is letting us know that there is a case built for the European economy to start picking up, but you got to keep in mind that this is the manufacturing sector, and for the West, or for most of our westernized societies, the manufacturing sector isn't the most solid or the most income generating. It's really the services PMI. So then we focus on that. But for the services PMI, they're still in contraction territory, but they didn't contract, as bad as I guess some people would expect, but it did fall below the market forecast. So then that's what's really contributing to some of the risk appetite, the fact that this data did not come in too bad, even though we sort of expected that the European economy would be in some type of business contraction or economic contraction. But for the most part, it wasn't too bad. And that's what's also creating some of this risk appetite for today. So then that leads us into, even talking about the UK. The UK manufacturing services PMI came out and they actually beat expectations. But Later on in the U.S. session, around the same time as the Bank of Canada, we also have S&P Global Manufacturing and Services PMI, the flash data come out. This is the preliminary data. We have the final results coming out later, I think in February, but the flash data for January comes out early. This gives us an early signal, an early, I guess, indication of how January is faring for the global economy. So yeah, so we're going to be paying attention to these numbers because they are leading indicators of what we can expect throughout the month of January. But for the most part, risk appetite, let me just go to FinViz real quick and go to our futures heat map. I'm just going to make this real quick. You can see here on this futures heat map that there's a lot of green, that a lot of our asset classes are trading to the upside, primarily due to the US dollar weakness. And that's supporting some of these dollar-denominated assets. But you can see here across the board, global equities, except for the Nikkei, is rallying to the upside or has rallied to the upside. I think the Nikkei is pretty much at the mercy of the strong yen. The Japanese yen is one of the strongest currencies for the session. And I believe that has a lot to do with that the interest rate differential between the US dollar and the Japanese yen. Since the US dollar is pulling back and yields are pulling back, that's adding more upside to the Japanese yen. So then, of course, the Nikkei, which is the Japanese stock market, is sort of suffering from that strong yen position. But if you look to the far right, you can see that the VIX is fairly lower. That's our fear gauge. So at the moment, there's risk appetite. There's reasons to go long. There's reasons to short the dollar. So then that's the side of the market, or that's the field that you want to, be on a more broader sense. But as traders, we still take our signals from technical analysis. We look at the chart, we trade what we see in our chart, not what we feel when it comes to risk sentiment, because you all know that market sentiment can switch and flip within minutes and seconds, depending on what news comes out, what headline is reported, or even any type of black swan event that comes out. But let's go to the Forex heat map real quick right here. And you can see here the Forex heat map. You can see that the strongest right now is the Swiss franc. So then that could contribute to the sell-off of the US dollar Swiss franc position that Melvin talked about earlier. We may not get the type of pullback we want, but that's one of the stronger currencies for the session, followed by the Japanese yen and the Kiwi, the New Zealand dollar. That benefited earlier in the Asian session from some inflation data that came out. Inflation ended up picking up in the fourth quarter. So that's the reason why the New Zealand dollar is pretty strong. But as you can see on the other end of the spectrum, the US dollar is the weakest currency, followed by the Canadian dollar. The Canadian dollar has pretty much been idle ahead of the Bank of Canada monetary policy meeting. And then we also have the Australian dollar also rallying. It's still green, but it's not rallying at the pace or rallying as quickly as some of the other currencies. So, but yeah, that's pretty much it. I just kind of wanted to touch on just market sentiment real quick. But yeah, this is in the digital space. We see Bitcoin Cash is leading, then followed by Bitcoin and Ethereum, and they're also benefiting from this sell-off in the US dollar. But what's been struggling the most is Ripple XRP, which has been really disappointing for most of those traders. But yeah, for the most part, this week has been a ho-hum week. It hasn't really been a good week economically. There hasn't been much on the docket, and plus, markets have been somewhat trading within a range. There's been a lot of inside trading. There hasn't been much happening. So it's been really a boring week, but I think the markets are sort of waiting for some high-tier data to come out later on in the end of the week, some U.S. growth data and PCE data, inflation data, I should say, that may kind of give some clarity on the path of the Fed and what the Fed, expects to do. But yeah, that's kind of what I'm going to touch on today. I'll pass the mic back over to Melvin, and I think he'll discuss gold and some other instruments in a little bit. Yeah, I may just do gold, and who knows? I may do the NASDAQ. But okay, so yeah, let's talk about gold. Gold is one of those pairs that you either love or you hate, or one of those assets that you either love or you hate. So I guess what I'm going to do right now Let me do this right quick. Let me go to, okay, right there. And well, let me, okay, let me go to TUUSD, and let me do this one. I think I was doing some analysis on that one. Okay. All right. All right. Okay. So then starting on the daily chart, you know, I mean, well, the weekly chart, we can see that, you know, we were somewhat, you know, bullish for the most part. Price gave us this minor correction that turned to a, what could be a complex correction, but, you know, we have bias to the upside on the daily. That's one thing we do know, is that it looks like price wants to push up, but we don't quite know yet. So it's one of those things where we need to go down to a smaller time frame to really figure out what price wants to do. But yeah, so let's go down to the daily. Okay, so then this is the daily chart. So this is where it gets kind of interesting, because on the daily, I know before I drew this A, B, C type move, which could still be in play, but you know, right now we're seeing something a little bit different. As a matter of fact, it looks like this could be the C leg, and this right here, this impulse could have been the B leg, and down here could have been the A leg. So in other words, let me just modify this. So then you bring this C right here, B is right here, and A is right here. In other words, we could potentially see price make another push in an attempt to go higher again. But anyways, let me just remove that, because I don't want to confuse you any more. So what we have right here, we have this ascending channel, but we have also something else going on as well, which can lead to more confusion. But it doesn't have to be confusing, not at all. I should have kept those there. Let me just keep those there. Okay, so on the daily, this is what I see. Also, I see price doing something like this, where we have a channel inside of a channel. So let's clone this one, and we can bring this down to here. So we also have a descending channel as well. So we have an ascending channel to the upside. We have a descending channel to the downside. And we can even take this further and say, this isn't just a descending channel. We have also what you would call what? What is this when you have this long impulse and then this complex correction or consolidation within a channel? Like, what is that typically called when you see that? For those that do know. Well, it's called a bullish flag. Yep, Naomi's correct. A bullish flag. So, you know what we're going to do? We're just going to see how price reacts to this trend line. But for the most part, we're sort of neutral on the daily. We don't know if it's going to go up, if it's going to go down. We're neutral right now. But if you go to the 4-hour chart, we'll get somewhat a little bit more clarity. Let's go to the 4-hour. Okay, so this is the 4-hour chart. And let me just delete this. We don't really need this zone right here. And well, I'll keep this here. It seems like it is in place somewhat. But yeah, on the 4-hour chart, let me get rid of this. We see that it looks like momentum wants to shift to the upside. It wants to shift to the upside, but we still need to see price break these highs in order to know for certain what it wants to do. Because you look left, we see structure to the left. We can see that the same area we had highs right here, highs right here, highs right here, you know, right here with these wicks, these nice wicks in this area, which lets us know this is an important area. And then the same area acted as support right here with these wicks. So what we want to do right now is just draw in a zone to identify this area of structure. So then we can just say, hey, right now price is trapped between a resistance and a support. We're in this phase of indecision. And what we need to do is wait for price to break out in either direction. It can break to the upside or it can break to the downside. I'm leaning towards the upside. That's where my bias is right now. So then what you could do is simply sit on your hands for now and not trade gold, especially if you're not a scalper. If you're a scalper, then you can definitely trade these swings between these support and resistance. You can buy at support down here, sell at resistance. But even if you're day trading a smaller time from like the 15, you can do that as well. Remember what I mentioned before, the market loves to leave footprints. So if you look at the other times they hit resistance and the other times they hit support, you can see footprints of patterns that took place that could potentially happen again. So then if you go down, let's say to, well, let's do the 15-minute. And we could say, hey, when price came into this area, we had what appeared to be a miniature head and shoulders type setup. Price expanded to the downside, corrected, and then we had a sell-off. You know, you can just look for stuff like that. But when we were at demand, we saw, well, this is kind of weird right here. This is probably more of a 1 hour, but yeah, we did see price consolidate, but the breakout is the part that could be confusing because there's a lot of ambiguity right here. Gold is one of those assets where it could be kind of hard to read. But anyways, right here we see a sell-off, pullback, push down on the 15. You guys get the point. But yeah, so then what we're going to expect right now, if you want to, you can look for price to sell off, which means we can see price crack these lows down here. And if it does crack the lows, then you can look for a sell. So in other words, something like this. That's if price does give us this opportunity. Look for the sell off, the break below, structure right there. Wait for the pullback, and then trade it down to the lows. You know, you'll just stick to that pattern that you saw. And then because price, once it gets to resistance, it usually tests support again. You can do that in the meanwhile, but just bear in mind that with the way things are looking and with US dollar weakness, we could see price expand to the upside. So then that's the reason why I'm of the firm belief, if you're patient enough, you can wait for price to break and clear the zone to the upside. Wait for it to clear that zone and then look for your buy. So then on a pullback or dip in price. So then you'll wait for that expansion, pullback, and then trade it up to the upside.
Yeah. You know, or, you know, if you want to be aggressive, of course, you know, you can enter in, but the wisest way, or I guess the most risk averse way to trade the yellow metal right now is just to wait for it to create fresh new highs and break the current highs, and then you can take advantage of that dollar weakness. Because just like Melvin said, like really, like gold as an asset, it really is more of a product of what real yields and treasury yields are doing. Yeah, I know some people talk about supply and demand, and that's true to a little extent, but really when it comes to gold, price action is primarily pretty much at the mercy of real yields, treasury yields minus inflation expectations. So then if we ever see real yields continue to tumble, which they are today, both real yields and nominal yields refer to just bond market yields. They're selling off, so that's going to underpin gold and underpin other precious metals as well. So then, yeah, so then right now on the fundamental, on a more macro, micro basis, like when you talk about market sentiment, there should be possibly more upside in gold, but we do see that area of supply, that area of resistance that is testing now, and there's no guarantee that it'll claw its way through. And there's also times that sentiment reverses, like after the Wall Street Open. Are we going to see a continuation of the rally we've been seeing in equities with that whole US dollar led rally where US dollar is weakening? We're seeing the US equity benchmarks rally to the upside, and of course gold is going to take advantage of that as well, with a more of a sustained rally to the upside if that's how the Wall Street opens. But if we see something different and the markets want to retrace or return or rotate lower, then yeah, that can build a case for gold to break those lows below, and then we can look for a setup. But I guess a lot is contingent upon what comes out in the next hour. We do have the Bank of Canada and some other U.S. data coming out as well. But yeah.
Yeah. So yeah, depending on what type of trader you are, will determine what you would do. You can either wait for the breakout or you can look for this breakdown. And it looks like price may want to break down somewhat. So yeah, we'll keep an eye on it. But yeah, that's, guys, long term, we're expecting a push to the upside. Near term, we're expecting another attempt to reach these lows or test these lows down here, or at least this area of minor weak demand, you could say. But yeah, so yeah, this is gold. And what time is it right now? So then, do we have time to do the NASDAQ? I
just say that for the private war.
Yeah, well, yeah, maybe we can save it for the private war room then. Yeah, we'll probably save it for that. If you guys want to come, yeah, we'll be in a private war room in a little bit. So almost an hour from now, we'll be there. But yeah, that's pretty much it. I don't have too much to share with you guys for now, but thank you guys so much for coming to today's live trading session. I hope you got something from today's session. And remember, like, we talk about both the technicals and the fundamentals, but the part that you really need to master the most is really the technicals. And, you know, I hope these sessions help you out somewhat. But in the meanwhile, just trade what you see, not what you think. Just look at price action, look at where momentum is, and then let that be, you know, where your decision lies. Just trade it. Just look at all of that and consider what you want to do in the market, whether the market's moving up. If it is, look for support. If it's moving down, look for resistance. Look to sell at resistance. It's just that simple. And all you need is money management and risk management to throw on top of it, and good psychology. But yeah, that's it, guys. Thank you guys so much for coming to today's live session. And as we always say at the end of every single meeting, remember to always count your blessings, not your pips. And we'll definitely talk to you soon. We'll be in a private war room, so you guys can meet us there a little bit after 9 or around 9 a.m. Central, 10 a.m. Eastern, if you guys want to come and join us. But yeah, that's pretty much it. I don't have any more to share, but thank you guys so much. And we'll talk to you guys soon. Well, before I end, let me see what's happening with this Kiwi USD. I could tell that price started falling more. Okay, where are we? Oh, well, wait, no, it was the US dollar Swiss franc, I think, right, that we were looking at initially. Yeah, it was the US dollar Swiss franc. Yeah, okay. So yeah, we can see that it went deeper into this zone. So then we're going to look for a 1 hour pullback on this one. So of course, that takes us right into the same zone. You don't really have to change much. Maybe adjust your stop. Maybe we can have a wider stop, a slightly wider stop. But for the most part, we're looking for shorts around the same zone, same area, since, you know, nothing really changed too much. But yeah, so yeah, that's pretty much it, guys. I don't have anything else to share, but you guys have a wonderful rest of your day. We will talk to you soon. All right. Okay. Goodbye.